Bazaar Morning Call, broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Tuesday morning, bright and early. We're coming to you as always from the CNBC TV 18 Motilal Oswal studios. I am Prashant. With me, my colleagues Surabhi and Nigel. Morning, guys.
Morning. Hi, good morning, Prashant. Good morning, Nigel. Well, I'm here because Sonia is not. I'm so glad you are, Prashant. We're hoping you're feeling better. He's a warrior who's pushing through a bit of a little cold.
Hope without any sneezes, right? Otherwise, you're going to turn your faces that side and put a partition here.
I think there's some weather change, right? I mean, you just look up today, there's a dark cloud. Yeah. So in all probability, I think we'll see some...
Nigel, monsoon rains are still away. I mean, you know...
Exactly. I don't know what cloud he saw in Bandra.
But it's a little overcast. It's like...
It's a little overcast. So. Surabhi, I come on a two-wheeler. I have... You know, I know how hot it is. Today it wasn't that hot. So that's why I said maybe...
It's a good sign then.
Maybe, I mean, it depends. If it rains, then it's a bad sign. How do I get home? But it's been a little bit cooler if I compare, you know, these couple of days in comparison to what we have seen in the morning, Prashant. I know during the day it must be getting really hot.
Absolutely. The skies for markets are not overcast at all. I mean, they're looking bright and sunny. So let's actually, get you the lowdown in terms of what you need to know. Okay, so Nifty yesterday saw pretty good follow-on buying after taking support of the 20-day moving average on Friday. Remember, in the morning yesterday, same time we were talking about this, how it was a very clean 100-point bounce off the 20-day. And many times it happens that, you know, once you retest the short-term reversal level, which is the 20-day, markets can kind of extend gains, extend rallies, respect that level and move higher. And that's what we saw. So 18,314 is where we left off, not very far away, about 20 points away, less than that from the day's highest level. Now, you can nitpick and say that banks did not participate, and that would be true. Banks were unenthused through the course of the day, and the broader markets were mixed. So it was not wildly, positive advanced decline, broader markets rallying. It was 1:1, middling through the course of the day. So there were equal number of volume-led losers, equal number of single stock large gainers as well. And we'll talk about some of those things. Is the sentiment coming back for the Adani Group stocks? I mean, I think it's an important question. Remember, and this is data from exchanges, etc., retail ownership in Adani Group stocks, I mean, this is public data, since the time that the Hindenburg report has come out, has actually gone up. It's not come down. So, and, this used to be a bunch of stocks which was pretty representative of retail sentiment out there. Yesterday was one of the best days, actually I think the best day for the group stocks since the Hindenburg report came out. So keep an eye out on these stocks. Once again, big gains. The Enterprises Ports are part of the Nifty, but all of the other 5-6 names were either at their daily limits higher or posting very, very strong gains. On the Nifty and the Bank Nifty, so the Nifty has got resistance at the swing high of 18,459. It's not very far from where we are, about less than 150 points away. And the daily upper limit for the Nifty is at 18,521. So these are near-term resistance levels to watch out for. Of course, the all-time high at 18,887. But in the near term, these are the two levels to take out. On the way down, the 20-day moving average, which so beautifully sort of was respected last Friday, should act as a support. That stands at about 18,142. Markets have been looking good overall. Bank Nifty support comes in at the 20-day moving average. By the way, the bank index did not test the 20-day. The Nifty did on last Friday. But the 20-day for the Bank Nifty stands at 43,388. And that, I think, is the support. So I'm just putting out the support. We'll see if the action starts to come back into the space and we'll look at levels higher. But if the Bank Nifty continues to see a little bit of sideways kind of action, that's the level which it needs to hold on to. U.S. market action overnight is okay, it's positive. The Dow was a little lower, but the Nasdaq, the Russell 2000, actually the small cap Russell 2000 index was up about 1.25%. So it's not looking bad. And global markets are keenly waiting for the resolution to the U.S. debt ceiling. There are 9 days to go. If you consider that the 1st of June is the date, I mean, some say it will be 5th, some say it will be 7th. But assuming it's the 1st of June when the U.S. Treasury runs out of money, I mean, there are 9 days to go. And any resolution there, I think, can spark a risk-on rally in global markets as well. There are people like James Sullivan of JP Morgan yesterday, same time in the morning, who were telling us that markets are not pricing in any fear. And his fear is exactly that. And he's recommending investors in the U.S. to take some go into cash and then get back in when the market does a bit of a swoon around these headlines. So we'll wait for progress around this one, but that's the trigger to watch out for through the course of this week for global markets. Surabhi.
Prashant, hi. I remember I think it was political science or international relations class, so way back in class, the 9th or 10th, I loved a word called brinksmanship, right? And that's exactly what's going on with those debt ceiling talks right now. So you're meeting one day, not meeting. I think the Speaker of the House made some positive remarks after the meeting with President Joe Biden. So it's a daily phenomena. But what we do know is that while markets on the equity side are kind of taking it in their stride and mostly unfazed, look at the US 10-year. That seems to be pricing in some of this uncertainty. No one's holding their breath saying that, oh, this could actually become an issue. People expect it to be passed. But the US 10-year has inched up. For the longest time, it was around this 3.4, 3.5% handle. But now we're looking at a level of 3.7. So some of that pricing in that Prashant alluded to, that James was talking about yesterday, maybe at least in the bond markets, some of that is playing out. The dollar index also at 103. The key question for us over here really is that what next? What are the triggers? We're at the fag end of the earnings season. And this is a market that's searching for some more decisive cues to perhaps come its way. The key question is really whether this zone of 18,400 to 18,450, whether that can be taken out this time, because it is here where it seems the bulls kind of get a little jittery. I was looking at the FII trends, FPI trends, no complaints over there. And this is the data coming in from the depositories. So it's the final data. And it's been very, very strong right throughout, barring 2 days where we're in triple digits. The rest of the days, it's 1,500 plus, 1,500 to almost 2,000 on the FPI side. Even yesterday's number was about 750 net positive. Results. As I said, we're at the fag end. It's some good, some bad. Yesterday, PB Fintech, by the way, for me, really stood out. At that adjusted EBITDA level, they have broken even. One can argue the sanctity of the whole adjusted business, right? Adjusted EBITDA, adjusted PAT. That's a different debate, and we'll have that during the course of the day. But even at the PAT level, the losses have really reduced significantly. So that's a number that stood out for me post-market hours. Shree Cements, Nigel will talk more about that. Some disappointment at the operational front. BPCL, fantastic on the operational front. Huge blowout performance on margins, much better than expected. So we'll keep digesting some of these numbers as we go along. Today's tally, I thought I'll just put that out as well. We have some interesting names beyond the index. We have Ashok Leyland, Dixon, there's Biocon, NMDC, Amara Raja. So stocks with a fair amount of interest in the market reporting today as well. Nigel, what's your sense? You think the bulls can take out this zone of, it's only optical. We're practically at all-time highs. Optically speaking, it's this level of 18,400 where, perhaps a little bit of cold feet situation happens. Well,
Surabhi, you're recalling your school days. I'm just recalling the IPL. There have been a lot of good innings in there.
Yeah.
But what takes you home is that final punch. And do the bulls have that final punch in there? That's going to be important. For one, who's really playing a good knock in cricketing parlance is the Nifty IT index. Yesterday, that index was rock solid in trade. And, importantly also, it closed above the 100 and 200 DMA. For the first time in a long while, it closed above the 29,000 odd mark. So a bit of a technical factor playing out there. And the markets were up 100 points with the Nifty Bank not performing. That's because of the IT index. The bears, though, they have given their intent pretty clear. They're saying they want to defend that 18,450 to around 18,500 odd mark. But for today, maybe the IT index has some more room to move higher, given that the Nasdaq ended at its highest levels we've seen since August 2022. But the crucial factor is going to be the Nifty Financial Services Index, because today is Tuesday, so obviously the expiry plays out there. A quick word on the flows. Yesterday you saw the FIs and DIs, both of them bought, and I'd like to look at the data together. So yesterday the institutional buy number was around 1,500 crores, which was 50% higher than the 10-day average. On an average they've been pumping close to around 1,000 crores. And just looking at the large cap stocks, it told you that institutional flows were pretty good yesterday as well. So let's hope that continues. The FI data from the FNO market is not giving you much direction. They added more longs than shorts. They bought more calls than puts. The problem is they also wrote more calls than puts. So that's really inconclusive in terms of the data points that are coming from the FIs in the FNO market. And this week we know we have expiry that plays out. So things will pick up steam in the next couple of sessions. Now the PCR has moved to around 1.21. Remember, when it moves to around 1.35, more often than not, we see a bit of a pullback. So it got some bit of room out there. And the reason that it's moved from around that 0.8, 0.85 just in the last 2-3 sessions to around 1.2 is because at around that 18,200, 18,300 put, well, they added close to 90 lakh shares. Aggressive writing is what we are seeing at those levels, which brings us to the levels. Since the 18,200 put is getting written, the premium ended at around 30 rupees, but at one point of time, it was close to around 70 rupees. And that's precisely where the 20 DMA as well is at. So on the downside, 18,130 becomes a support zone. On the upside, the bears, they're going to come to fight at the highest levels you've seen in the recent past, which is 18,459. But since it's the Nifty Financial Services Index expiry, well, we saw some writing yesterday at around the 19,400 call. Just going by those data points, well, 19,500 becomes a bit of a resistance zone. The premium ended at around 50, but it was higher during the course of the session. So if the Nifty Financial Services Index can get closer to around the 18,500, maybe breach that, well, then the bulls will be betting on us moving and breaking the recent highs. SGX Nifty, for starters, is indicating a bit of green. Yesterday, we had a good session. We need to build on that. IT could fire, but we need some support coming in from the banks and the financial names, because only then we get to around that, closer to around 18,450 odd.
All right, Nigel. So we'll keep an eye on the IT names as well. Before we go any further, let's quickly tell you what's lined up in the first half hour of the show today. We get you updates from markets across the globe. Cameron Brandt of EPFR Global will join in to discuss the global setup, but we'll focus with them on flows specifically. Our research team gets you CNBC TV18's list of top 10 stocks for the day. And at 8:30 this morning, we have Sanjeev Bhasin of IIFL Securities with his thoughts on the market. He's bullish. He's thinking of newer highs. So that conversation comes up as well.
Okay, let's kick it off then with the equity call of the morning. Hiren Ved of Alchemy Capital says that they're bullish on the market, even as it is in consolidation mode. He says we have seen reasonably good earnings in the fourth quarter, and the breadth of the market has improved substantially. He says better than expected earnings are a good catalyst for the market to bounce back, and he will not be surprised if we achieve the 20,000 target on the Nifty by Diwali this year. They like capital goods, infrastructure, auto and cement, which they feel are in a structural bull market. He says there is also time to become contrarian and start looking at discretionary consumption stories like QSR and liquor companies.
Well, let's get you some money market views now. Abhishek Goenka of IFA Global says the rupee has been under pressure over the last few sessions due to broad-based dollar strength, cash dollar shortage and depreciation of the yuan. He says it will be interesting to see whether the RBI is as aggressive in putting a ceiling for the pair around 82.9 to a dollar mark as it has been, while placing a floor at 81.6. He says with the rupee liquidity now comfortable in the banking system, the RBI will supply cash dollars through swaps to alleviate cash dollar shortage, thereby supporting the forward curve and easing the pressure on the rupee. He expects the pair to continue to trade in a range of between 81.6 to 82.9 to a dollar.
On bonds, Ajay Mangdulia of JM Financial says improved liquidity with GSEC maturity, RBI repo injection and perceived deposits of large ticket notes have improved levels in short maturities and sentiment in the market, which is likely to continue to be positive for some days. He says the steepness in the yield curve can be seen in light of yields hardening in the US Treasuries. He says market sentiment is likely to remain positive today, with yields on the SDL auction expected to retract to current levels. He says any further rally in crude, coupled with hardening of yields in developed markets, may impact the ongoing rally and stability in yields. He's expecting the 10-year benchmark bond yield to trade in a range of 6.98 to 7.02% for the day.
Well, a lot of stock-specific action that we're tracking for you, and we'll get to that in just a wee bit from now in our special Top 10 segment. But we're looking at BPCL, Vedanta, PP Fintech, SJVN, Astro Micro, India Bulls Housing Finance, and Fusion Microfinance. Their stocks on the back of positive news flow. On the flip side, you have Shree Cement, Finolex Industries, and HEG that could be reacting to negative flows.